There's a lot going on in the world today. A lot going on in the world. Let's talk about it. Let's talk about it, gang. I had a lot of people in my inbox right now. That's why I decided to go live right now. There are a lot of people in my inbox asking, me to weigh in on the situation and to provide, my commentary on the situation. And so that's why I decided to go live. No notice. Nobody had any notice. So don't really expect too many people to show up. But hey, if you guys can get it popping, man, share the video, hit some likes, ask your questions and we'll go over it. Me, myself, Pierre Lawson, the founder of the Wallstreet Jackboyz, financial analyst, stock trader, educator, trainer, coach, that's me. That's my background. And I'm just going to talk about what's going on right now. So we've been covering this whole situation, for quite some time here. If you guys are not familiar with my work, my team, everything that we do, let me see. Let me just log in over here real quick so you guys can see. We've been talking about this recession to come for quite some time. And for those that's not familiar, here you go. Here, this is 6 months ago. The world is not ending, but a recession is on the way. If you haven't actually read this article, make sure you read it. If you want to know, about the financial markets and things like that, you want to know how these recessions occur. How are we able to time it? Granddaddy Dalio's over here talking about right here in the Twitter feed with a lot of debt outstanding and big wealth and political gaps. The coronavirus was the thing that caused the downturn. He's talking about the thing that's pricking the bubble. This is our website, by the way, for you guys that's not familiar. This is Wallstreet Jackboyz. So make sure you guys go and register to our website, wallstreetjackboyz.com. I'll make sure to drop a link in here so you can get it if you're not familiar. Registration is free, actually. We have a new and improved website. So if you've been here a year ago, come back today because everything is totally new, where you guys can join for free, get in on some of the action. The training, of course, is not. However, the information is free. So make sure you get that. But again, we talked about this. This is 6 months ago. We've been tracking the economy and the health of the economy. We've been talking about, if you actually could just look in this article, it tells you the inverted yield curve is the number one indicator to predict a recession. This is why I've been talking about it for a long time. It's not the end of the world, so I don't want you guys panicking thinking it's the end of the world, but things are going to be really bad. So things are not good right now, and that's just something that we have to deal with. All right. If you guys can see in the end of the article, I said every recession is a bit different. And so we don't know what kind of recession that we're entering as of now, but there's a strong evidence to support a recession on the level of 1929 Great Depression that is on the way. This was 6 months ago. So remember, when we do, things like Game Plan Sundays, I'm live every Sunday on YouTube. We were doing Facebook, but people on Facebook haven't been giving us the reaction we've been needing, and YouTube has. People are interacting, people are sharing, people are hitting the like buttons so that the algorithms can get us popping versus, people that's not offering value popping, because there's some crazy people that's popping on social media just talking stuff they don't even understand. We're in the markets live. We actually do this, okay? So, but we have our own website. So, we're just now coming on a social media platform. We've been around for like 3 years now. We got our own website, as you see, Wallstreet Jackboyz here. So this is where you guys can join us at and, get all this great information. So anyhow, we've been, talking about this recession to come and, ahead of time. But now we're here, okay? And so it really doesn't matter as of right now why we're in a recession right now. The fact is that we are in a recession, and what can we do to actually mitigate risk, preserve capital, and to make money at the same time? That's what the whole name of the game is. So we had a lot of bubbles that's been in the economy. We've been talking about the economy has been weak for a long time because of the economic data that we've been seeing. Me, as a stock trader, I definitely like to get in on the action and make some money trading the stocks. But I also like to inform our students on the macro, the economy overall, because it does play a role in what we're doing in the stock market as well. The stock market is not the economy. The economy is bigger than the stock market. Stock market is just one section. All right. So it's just real estate is another section, right? All these different things are different sections in the broader picture. And so we try to cover a lot of these things here. And when we find imbalances, then we have to call it out. And so there's been a lot of imbalances in the market. My wife, she always talking about, keep balance. Because sometimes when I go into my studies, I'll go overboard. When I go overboard in one direction, I neglect something in another direction, right? And so it's like, okay, buddy, you got to take care of family too. You can't just be the super nerd that you like to be, right? Because y'all know I'm a super nerd at times, right? So you have to make sure you have balance. But we had those imbalances in the economy itself. So when we had these imbalances in the economy, you create issues. Those issues, these are bubbles. And all it takes is for one pin to pop the bubbles. And then the whole thing come collapsing. So I know there's a lot of pundits out there say, oh, you wrote that article. This is just luck that you talked about this recession. It didn't matter what the pen was going to be. The recession was coming because that's the way our debt cycles work. That's where we are in this economy. Everybody's over levered. The U.S., people in America don't have savings, okay? A lot of the businesses don't even make any money. They're just using debt to fund these things. So you have debt bubbles on top of debt bubbles. The IMF, they've been wanting for the U.S. to actually, do something with the debt levels because they said it's been unsustainable. Been talking about this for like 2 years now. The debt levels that we have now are actually far outweigh the debt levels of the 2008 Great Recession, right? And these are things that I identified because I actually track the data myself and actually run models and build charts myself. So when I talk about these things, I actually know about what I'm talking about. I'm not just taking some article that somebody said and just taking it for what it is. I'm actually really literally doing the research myself. And then I'm providing commentary and my insight because we all got to make decisions. And not every time you're going to be right. But I got enough framework that lets me know if it looks like a duck, it smells like a duck, it quacks like a duck, then it's a duck. So as the stock market has been going up to these new highs as of lately, we've been talking about, hey, this is treacherous territory. You guys know I've been saying this. If you haven't, go back to all my Game Plan Sunday videos on YouTube and you can just go binge watch them, listen to them. You don't have to watch them, just listen to them, right? But you can see the stock market was going crazy high. And I was just like, hey, I'm not seeing why we're going so high because the companies, they're not producing that level of cash flow. They're not producing that level of value. And so the earnings, they haven't been as strong. But what Wall Street does is they do a lot of manipulation with the numbers as far as lowering expectations, lowering the earnings expectations. So you had the beginning of this year, in the last year, these companies beating earnings just because the expectations were lowered. If you look at the previous years, they actually made more money in those times. So you mean to tell me we're going to be celebrating because these companies making, a little bit of money, but not as much as in the past. And then they're hitting crazy highs. That kind of stuff doesn't make any sense. So it's been kind of treacherous trying to navigate through this environment. And so the weaknesses in the economy are now being exposed. We're just at the beginning of the recession that we've been talking about that's coming. Okay. For the impromptu session. Oh, yeah. Thanks, KB. Still a supernova. Okay. But good to listen and hear the lingo. Keep up the good work. I appreciate you guys joining. So, yeah. And if you can't see the screens, you guys can join the chat. I should have dropped the chat link in there for you guys. But join the website. You get all that stuff, right? Ken, my man, said, I remember months back you said it's a recession. Thank you, Ken. Yeah, we have been saying this. What about people that are self-employed that are being affected? What should we do for income? Yeah, so everybody's being impacted by this. And I just want to address a couple of things because I know it's a lot of, we have these social media stars, Instagram stars and YouTube stars and stuff like that that's out there that were telling people to just buy stocks. And I think that's the reason why I had like this flood of people just in my inbox saying, hey, man, what stock should I buy? What should I buy right now? And I was telling people the same way I tell my students here is that this is the beginning of the recession. OK, and there was a lot of people saying just buy on the way down. And I don't subscribe to that belief. OK, so what you want to do is we want to see if this thing is going to stabilize right now. What happened today, even just now, Trump is going all in. All right. It's a lot that's at stake here, a lot that's on line. We got a presidential year right now, 2020. The Democrats really did themselves in when they got rid of Sanders and now they got Biden. So now, unfortunately, y'all going to have to watch Trump put the work on Biden, which is going to be interesting. Sanders was the better pick. Because of this recession that I knew was going to happen. That's why I was telling you guys, when people are broke, they don't care about Trump bailing out companies. They're going to want to know what's in it for them, But it just so happened to be that Trump is doing the same thing that Bernie said he was going to be doing, right? Cutting people's checks and stuff like that. So, yeah, so with this bailout, we're doing a massive, massive bailout. For one, you guys have to understand the government doesn't make money. Many people do not understand these concepts because they don't teach you this in school. That's why we have our own school, Wallstreet Jackboyz. Subscribe, please. Help yourself out. So we teach this stuff that they don't teach you in school. The government does not make money. Where do they get their money from, right? It's either debt or taxes. So everything they're spending, we have to pay for. Nothing is free. So the thing is that we've been running massive deficits, right? And so we were in the best of times. I was telling you guys, we're in the best times. It's not going to get no better now. And the deficits are higher than when Obama was in office. And there was a lot of conservatives that was not pleased with Trump because he's spending money like a Democrat, right? And so to fund all these, you got space forces and all kind of stuff, this bloated spending on stuff that's unnecessary. And just 2-3 weeks ago, everybody and their mama was so excited. Market is hitting new highs. Check your 401ks. Now you have people sitting ducks, 401ks depleted. Got people that's losing 30% on the 401ks, 40%, just crazy. Because most people don't understand. You're just sitting ducks, right? But if you understand this game, then you can protect yourself. That's why Wallstreet Jackboyz is a good investment in yourself, because whether you trade or not, at least you have the knowledge so that you can navigate through in times like this. You can navigate through it. So people think that a lot of people sign up because they think that they could just Pierre's going to show them how to buy a stock and they're going to make money for the rest of your life. No, as traders, we got to work the markets. So if you're not someone who wants to learn how to read charts and learn how to navigate through this, then my program is not for you. There's no such thing as just giving your money to somebody and you're going to get rich. It doesn't work that way. Everybody got to work the markets. That's the risk that's at hand. So you can either pay somebody to work it for you, or you can invest in your knowledge so that you can learn how to navigate through these charts. And not every time does the market always move up. The markets normally always move up, but it also has downturns also, right? We go through recessions normally every 5 to 7 years. We're going through one right now. And this one here is a bit of a scary situation because we haven't seen anything like this before. So I kind of want to give you just a little insight on what's happening right now and what you should be focusing on, right? So what we have right now is that we have the feds that came in, the Federal Reserve. That's not the FBI for y'all that don't know. Federal Reserve, they control pretty much the economy, right? So you have, just think about it this way. Us, the people, are at the bottom, right? The corporations are the layer above you because those are the ones who you go get your job from. They're going to pay you, right? And then above the corporations, the government, your politicians, they're making regulations and rules, your FCCs, your SECs, and all those guys. And then you got the banks at the top, right? The money runs the world. You ever heard your mother say money makes the world go round? That's literally the truth. Okay. So money's always at the top. Wall Street is important. This is why I took the time to learn this all these years, because I no longer wanted to be a victim of these things that's happening at the top. It's all happening to the top, trickling down to the bottom. Right. What's been happening is that the feds basically create these recessions and they create these wealth gaps. Right. They create these imbalances by saying that they're creating solutions. Right. And in a real capitalist society, and I'm a capitalist, in a real capitalist society, you let the free markets determine who lives, who dies, right? If Pierre Lawson and the Wallstreet Jackboyz ain't hot, then, hey, we got to go off the web because people ain't subscribing, people ain't sharing the videos, people not liking the videos. Obviously, we must be missing out on something, right? So the company has to die. You let it be that way, right? But if it's like, oh, I'm not doing good, somebody else's channel is doing better, and I need somebody to bail me out, that's not capitalism. That's socialism, right? We don't look for handouts. You got to let the strong beat the weak, basically, right? I mean, that's what's going to happen. They're going to out-survive the weak. So what happens is whenever we go through these imbalances, I want to show you guys something real quick before I even go through that. Let me just show you this yield curve here. Just give you a little better perspective so you can really understand what I'm talking about. The yield curve, you guys probably don't know about it. But this is really important to know and understand. I'm going to take you to the yield spreads. We're going to go back 30 years because that's all I have in my charts. All right. So again, this is on our website. Again, this is the yield curve. I track it. This data here, this chart, you guys can interact with it. You can look at things that you want to look at. But why this is important is because I want you to see what the feds do. Okay. What the feds do, they have a tool which they call monetary policy. Monetary policy. This is what they do to save the economy, right? This is what they do to create these booms and create these busts. This is one of their tools. It's called monetary policies. It's the Fed fund rate, the interest rates. All right. The interest rates are very, very important because, again, central bank at the top, smaller banks down here, government, corporations, people, blah, blah, blah. The triangle, it goes down. But everybody got to go. You got to go through the central bank. Right. Government don't make money. And the central bank can't give money directly to the people, right? So they actually give the money to the central government so they can get it out to the people by buying things, right? They buy stocks, they buy houses, they buy mortgages, right? That's what they did, in the 2008 recession, buy mortgages. They do this stuff, what we call quantitative easing. They buy bonds, and they can buy bonds. It's the IOUs, that so the government can get money, so the government can, push out welfare, which Trump is getting ready to give everybody at least $1,000 check, from what we know. And if you have kids, you may get more. So who knows? They're rolling this stuff out right now. But this interest rate, this is what I want to show you guys. So we've been talking about this for the longest. So just a quick little demonstration of how we're able to time the markets. We time the markets because this is the number one indicator that there is to time it. The yield curve. Anytime you see those yields go down, we're in a recession, right? You go through a recession, all right? And we've been talking about when they hit these peaks. And this is where we are today, all right? So just so you guys can see, every time in the past, when the Fed saved the economy, they normally have to have 5% of interest rates. If you look on the side here, we got 0, right? 1, 2, 3, what have you. They normally have to have about 5% points to save the economy, right? That means they're making, money and everything cheap enough for the corporation and everybody to borrow so it can stimulate. It's all like this mind matrix to get people to spend money. The economy grows when we're spending money. The economy goes into a recession when people stop spending money. So the whole matrix is to convince you to spend money. They don't hold a gun to your head and go tell you to buy a house. They say, hey, mortgage rates are at 0% or whatever the percent is. The Feds, what people say is the Feds dropped the mortgage rates to 0, which the mortgage rates are not at 0. That's what the Fed's fund rate is. The banks can borrow the money at 0%, but they got to make money, so they put their interest rate on. Either way, you still have a low interest rate. So it sounds convincing for someone to go and buy a house when you got low interest rates, right? That's the time that you're supposed to be borrowing money, okay? When the rates are low versus when they are high, okay? So look at this interest rate. This is what this does. The banks, again, when they get these low interest rates, they're going to be advertising it to you people so you can go buy cars. I was at the Dollar General store. Some guy at the cashier was going crazy. He was talking about, the interest rate is 0. I'm about to go buy me a new truck. And I was like, okay. More power to you, right? Because this is not the time to be spending. This is the time for you to be trying to survive, because we don't know how long this thing is going to take to get through. And they're throwing everything in their power at it right now. They're doing their final frontier, final stand. This is the Game of Thrones, the end scene battle that we're going through right now, literally, right? So the people that's at the top, fiscal, central government and central banks, that's what they're doing right now to try to save this thing. And it's getting way out of control, way out of their hands. Oh, okay. What's good, Topaz? I'm just starting here. I know I didn't tell you guys. I kind of came impromptu. So basically, when they drop these rates here, they normally only hold it down for about 2 to 4 years on average if we go back and further in time. And that helps the economy to, revive itself, right? Because the big dogs, they start to come in. Well, actually, the Feds, they come in and they start buying up the real estate, the stocks. And so they're the artificial piece that doesn't belong in the free enterprise system, but they're there to try to create stimulation. So they'll go in there and start buying up stuff. The big dogs see, okay, we see some movement. The Feds is going to go in and secure this. So then they feel safe and they feel confident. So they start buying up, mortgages. They start buying, real estate, right? And they start buying stocks. And that starts to move. And little guys like, we follow big dog, right? So little dog follow big dog, right? That's just the way the whole thing goes. So once that starts to pump, economy comes up, right? And it happens every time. Now, if you see every time in the past, they normally keep rates suppressed, okay? Low rates suppressed for about 2 to 4 years, okay? Under, when Obama inherited this economy, as you see, they kept rates suppressed for the longest time ever in history to 0%. So the time you should have been borrowing money, right? It should have been under the Obama years, but nobody told you that, right? So the people who bought their houses and all that during this time, they actually made a lot of money from the inflation. So what's happened is that the Feds come in and then they reflate the bubbles, right? They create the bubbles, they burst the bubbles, and then they reflate the bubbles. So in this particular crash, it was a housing crash, right? All the debauchery on Wall Street, what they were doing with mortgage loans, taking advantage of vulnerable people, right? And vulnerable people who have no knowledge of these things always fall prey to it. That's why I created Wallstreet Jackboyz, so I could try to get this information out. And I can't save the world. I can't help everybody because some people just don't want to know. I got people that's close to me, They don't even show up. And I can try to tell them, and they say, I'm gonna just do what I want to do. I can't save you. I'm sorry. But I can provide you information, and when you're ready, it's here. Okay. So what happens is the feds come in, right? And then they start reflating, the bubbles, right? And this situation was different. They came in here when Trump took office. They started raising the interest rates. Wall Street didn't like it. Wall Street didn't like it because the cost of doing business is too expensive, right? But this is good for the banks because at least the banks can make, 2.5%. That's where they were at, 2.5. The banks, insurance companies, they can make some money, right? Versus zero, they were mad at Obama, after they got their little, bailouts and everything, but they couldn't make any money on their investments in there. So they was mad about the low interest rate environment. And this is exactly where we are back at right now. So banks, they can't make no money right now. As you guys know, you guys already know the news. We're back at 0%. Now, this is what Trump has been begging for. He said, hey, man, I can grow this economy if I can get 0% like y'all gave Obama. He was mad because when he came in, won the election, the Feds flipped the switch because really, the truth be told, the Feds kept interest rates at zero too long under Obama because what they were looking for was inflation and they never saw it. They should have been raising the interest rates back here, but they didn't. They waited too long. So they created too much inflation. So they had this wealth effect with everybody, and their mama was balling out of control. Everybody's rich in their mindset. Everybody has these nice big homes. You guys know your friends out there with the nice big houses and everything that they probably can't afford. But that's what happened. This wealth effect occurred here, right? Because they kept it too long and people were spending more money. So they decided to turn up the knob when Trump came into office, and he felt like he was shady. He was like, man, if y'all kept it down that long under Obama, we keep it down here. But they can't do that because they overcooked the economy. And what happened when I say overcooked the economy, meaning that the inflation, because people have more money, because it's not money, it's actually credit. Money and credit spends the same, right? But they're not the same. Credit is a fancy term for debt. Understand that debt it gives you some cash up front to do whatever you want to do, but you got to pay yourself in the future. That's what we call servicing the debt. So in order for you to service the debt, you got to have some cash flow to be able to service that debt. But if you have so much debt that you have to pay in the future, you're robbing yourself in the future that you haven't seen. That future is today. These people was borrowing that money back then to get those nice houses and get those nice Porsches, Camaros, those nice cars. And, you got to, keep up with the service of it. And so you start having issues. And so what they started doing is they started raising these up here because when people started getting this money, this credit, access to credit, they start buying up things. And when they start buying up things, the price of assets, they go up. So if you look at your houses, the housing market, the houses are overpriced, overexpensive. I'm in Charlotte. I'm in Ballantyne. And it's too expensive for young people to even live here. I mean, to be honest, you can't afford to even live here. You got to have roommates or something, right? Because the houses are too expensive. And there are certain areas and certain parts of the country that the housing market is better. Like Texas, for instance, really good house prices right down there. But you have a lot of people that moved there, bought the houses. And so the locals from Texas, they'll tell you like they're not excited about the New Yorkers coming down, buying up these cheap houses. When they start buying up, it causes the prices to go up. And so although you have low interest rates, you have overpriced assets. The prices are too high. So when they lowered the interest rates, they lowered the interest rates to influence you to go out and start buying houses, buying assets. But you're looking at it like, man, that house is, $350,000. Man, that's too expensive. You see what I'm saying? Because you also got to think about, you got to service that, right? It's too expensive. So the Feds, they have monetary policy, right? The 0% interest rates is not working. Right? Because it's not causing the stimulation effect that they want because the assets are too expensive as is. OK, so that's not working. So we're looking at what you guys are witnessing right now is monetary policy failure. OK, monetary policy is falling right now. That means that the Feds can't save us this time. They saved us all the other times. But you got to remember, they had to have 5% in all the previous recessions, 5% to cut. We was talking about under Trump, they was trying to get it up, but they could never get past 2.5, right? And now they're already here at zero. So guess what? It no longer works. So now the second part of the equation is what we call fiscal policy. This is where they've been actually, begging Trump and Congress to do their part, which is fiscal policy. That's what you guys are seeing right now. Checks, bailouts. I've been talking about this for 6 months now, that they were going to try to get money directly into the hands of everybody. Go back and look at any of my game plan Sundays. They're all out there. And it's funny because that's what we're going through right now, is that they're actually literally putting the hands directly into the people. I didn't know there was going to be the coronavirus was going to pop the bubble, but I did know that we had multiple bubbles that were due to pop. Okay. So now we are in a global recession. So this is actually worse than the Obama recession. Okay. This is worse, and we have just begun. Recessions don't last for a week. For those people that don't know, there's people out there that's telling you to go buy everything, buy stocks, buy this, that, and the third. No, this is the beginning, okay? And anytime you have a time when monetary policy doesn't work and then fiscal policy doesn't work, you go into a depression. So hence the article, when I was telling you guys, let me just put this up. Hence the article when I was telling you guys about, we have strong evidence to support a recession on the level of 1929, Great Depression that is on the way, right? That doesn't mean that's where we're going to go. I mean, I hope we don't. I was hoping that we wouldn't go through this recession, but I just knew from my training that we were going to go into a recession. So it's up to me to let my people know, you guys, that, hey, this is what's happening, right? This is what's going to happen. So get yourself prepared. All right. So if you guys take a look at, this is this is a chart here, a monthly chart that's going way back to 2001. And so you guys can see the recessions that I have points highlighted here. Let's go to the dot-com bubble. This is the dot-com bubble 2000, right? There was a 50% decline during this time. Let me go to yellow. Okay. You guys can see this 50% decline. It took a couple of years for us to get through that, right? It's about 2 years, right? And then the Great Recession, all right, under Obama, that also took about 2 years to bottom out. And that's, you guys see 50%, right? 50% decline, 58% decline. All right. This has been about 3 weeks, okay? And we're already at 33%. You guys on Facebook, I don't know if you can see that or not. I'll try to adjust the chart so you can see it. But let me just adjust it so that they can see it on the Facebook side. All right. So this is where we are now. And I think you guys should be able to see this now. All right. So this is where we are today. And we're only about 3 weeks into this thing, just kicking off from its high. And we're at 33% already. And it's only been a couple of weeks, not years. So we're breaking records that we've never seen before. Okay. And right now, we need for the stock market to hold at this Fibonacci level that I have here. That could continue, that could snap and continue to go down here to this next level, 1600, which is not good. Okay. But we want to see signs that this is going to, and for those who don't know, this is the S&P 500. These are top 500 companies in America that's all consolidated in this one chart here, which is the S&P 500. You can actually trade this, but that floor is what we want to see this thing to solidify at, right? And so if we can get some solidification there, then that should prompt, people to have confidence and then to continue to start back buying, because they may say, okay, now this is a good floor. This is a good stopping point. But you don't buy when it's bleeding on its way down, because you're going to lose on every time you try to buy. So that's where we are right now with the stock market losing, a lot, over 33%. Remember, you're going to a bear market at 20% decline. So we're at 33% right now. They haven't yet called a recession, but we are in a recession because we're in a recession. People will stop spending. Companies will stop spending. You guys haven't seen the layoffs yet. The layoffs they're getting ready to come. So that's what part of the bailout is supposed to be, is to try to stop that. So that's what fiscal policy is trying to help. But it's companies that's already laying off right now as we speak, because they don't have a choice. We have the supply chain that has actually been negatively impacted. And that's the thing that actually kind of, that kind of frightens me on the outcome of this situation, is because you have people that have money. You got to remember, people just got their tax return. So people got money, but people can't buy the necessities that they need because they're not available. And so it's not the fact that you don't have money to buy. People got the money, right? Last time I checked, you guys in here, you got money, right? You got money to go buy the things. But when you go to the stores the food is not there, right? You don't have your meats, your foods, you don't have your toilet papers, you don't have your, whatever necessities that you need, things that you need. If you go to the stores, now they got plenty of shit up in there, shit that people don't need. You got all your chips, cookies, and crackers, right? But it's the things that people need are not available. So people don't have money. So people have money, but they don't have the thing that they need. They don't have supply. And so with the fiscal policy, they're going to give everybody these checks. That means you're going to get more money. You have more money. Does that help your problem? Right? You put more money in the system. You give money directly to the people. They already have money. They're not even broke yet. The jobs haven't even started laying off yet. That hasn't even came. So you can give money to people, and they still can't use the money to access the things that they have because the supply chain is shut. Because of the virus, countries are shut down. And as I mentioned several times, everything in your house, pick it up, look on the back, and it's probably going to tell you made in China. Everything is on gridlock. You can't nothing come in, can't nothing go out. Countries on gridlock. Now we're going on gridlock here in the States, right? And they were recommending this when they first started, that the states should shut down or close their borders and all this other stuff because they're trying to, contain this whole virus situation. To stop it. And things are going to get worse. More people are going to have the coronavirus. The reason why the numbers are so low is because we haven't had enough testing. And now they got, Google and all these other companies rolling out so they can do more testing. As they provide more testing, more people will actually show up with the coronavirus. So this thing is not just going to go away this week. It's not going to go away. As you guys can see right now, my futures charts, these little lines over here that's moving. For those that don't know, this is the stock market right now that's moving. This is the futures market. And it's all green. I make this color coded so you can see. All you need to know is when it's green, it's looking good. So the markets are actually looking good right now. They're rallying right now. And that's because the Senate passed this first part of the bailout. This is the second part of the bailout. There's a third phase to come. So we got 1 and 2, and then there's a third phase to this thing. And the hopes is that they can actually, stop the bleeding, right? The problem is if they can't do that, then we spiral into a depression. That means that it's all got to work itself out. I think Lil Wayne had a song called "It All Works Out," something like that. He made not too long ago. And so this is what's got to happen in this situation where the strong survives and the weak dies. Companies will implode, right? So we have a lot that's going on right now. Trump and Biden are going to be facing off again because we're also at that political stage right now where things are going to get really crazy. Right. And I think that the Democrats would have had a better chance with Bernie of actually beating Trump. And I think they have a lower chance of beating Trump now with Biden, even if we go through the recession, because Trump is easily going to be able to say that I had the economy jumping until that virus from China came over. Right. So he's going to be able to shift the blame off of that with no problem. And then the fact that he's, doing the stimulus right now, that's, probably going to win the hearts of people. And he has to do it. Well, he's trying to get it done like immediately right now. And that's what they're doing all this stuff in Congress right now, because he don't want the negative turnout, because then it definitely hurts his chance of getting reelected. And so he has to roll out the socialist policies that everybody's basically calling Bernie Sanders a socialist. But here we are. We still got to do the same socialist policies to try to save these, companies. But really, you don't have to save them. You can let them fail. And there'll be better companies who were better managing their monies that would take over. But no, they tell you that we have to save them. And we saved them under the Obama situation, same situation. What happened? The wealth gap continued to go. Because what a lot of people don't understand is that when the feds come in, you guys don't see this unless you're in the markets, right? When the feds come in, Wall Street knows the feds is coming in. When the feds coming in, they're putting the money in there. That money got to go somewhere, right? And they're all sitting there with their hands out, and they understand this. And so you can pretty much buy any stock. Basically, that's what these guys be doing, is buying any stock, because overall it's going to go up because the feds is reflating the bubble. It's artificial. It's not real. And those people that's not participating in the stock market, they are not participating in these gains, these highs, this wealth transfer, right? So it's a wealth transfer that separates the wealthy, makes them more wealthy and more wealthy. So when the downturns come, they're immune, right? Tell me if y'all see Warren Buffett at any freaking, grocery store looking for tissue, right? Tell me if you see Jeff Bezos, these guys looking for tissue in a line anywhere. No, they're going to call somebody up if they need it. They're going to, helicopter them, stork them over a whole, a whole facility of tissue and things that they need at their house, right? The wealthy are not impacted by this. You do have some of the wealthy at the top that's been trying to come down and educate people at the bottom, because they don't want, the people at the bottom to blame them because they're rich on the situation happening. And they're trying to tell you it's the feds that's doing it. But they see the thing is you have a free will, all right? Free will is a gift and a curse. The free will is that the information is widely available, okay? Wallstreet Jackboyz, I provide this. If you don't show up, I don't know what to tell you. So it's your choice that you want to go and watch Tom Brady, football, or you want to go show up the Wallstreet Jackboyz to learn this stuff so you can protect your money and grow your money. Up to you. Everybody has their own free will. We can't force anybody. It's all influence, right? So majority of people, they go through the entertainment stuff. They go through the sports. They want to eat chicken sandwiches and KFC and all this other stuff, right? On social media. But while that's happening, the money is getting transferred. The wealthy, they're actually taking advantage of it. And it's like they're trying to say, well, you can't blame me for taking advantage of the laws and the things that's here. It's your fault that you did not take advantage of these things. I mean, that's just the kind of way it go, right? And so I think now is a good time for people to learn what's happening as you go through this. And hopefully, you'll be prepared. If you're not prepared today, you'll be prepared for the next time when this thing comes around again. And again, these normally happen every 5 to 7 years because the economy is not run off of honest money, right? We don't have a gold standard anymore. We got the feds that can just print money at will. And so not to get off into a tangent about currencies and how this stuff works, but the financial markets, the economy is so convoluted. A lot of people really don't understand it, right? They have everybody so compartmentalized that you can't see all the pieces moving together and how we all collectively make this thing go together and our roles in this whole thing. So you have some people that's, my cousin is a Series 7 and my cousin is this, that, and the third. However, they don't know the entire whole. They're just a piece. Okay. Just like somebody that's in real estate. They don't know it all, right? They just have a piece. So it's important that you get like all the pieces. That's what I spend my studies doing. If those that don't know, I'm not a macro investor. However, I study in the macro investor ways, learning all these things. I study the top macro investors. And when I provide intel, I'm providing intel that's really literally coming from the big dogs themselves, which you can't speak to directly, right? But you guys can see me directly. So that's the thing. And no, I'm not a guru. There you go, Topaz. No, I'm not a guru. I wish. But no, that's that. But I think that for right now, as I was just mentioning earlier, you have people that have money right now. The money hasn't stopped yet. People got money, but they don't have access to supply. We have the supply chain that's been disrupted, where we have demand spike and supply can't keep up with the demand. Something has to break. So this is not sustainable. So you throwing money at the people, it still doesn't help. That's why we say monetary policy. I just showed y'all how that's not working. Fiscal policy is what's happening right now. Trump getting ready to roll his money out, and it's not going to work. Then we spiral into a depression. Okay. So this like, I don't care if the stock market rally today, next week, just keep these words that I'm telling you in mind long term. This is the boil over, right? Stock market is a confidence tool, right? So when people think about the economy, they think about the stock market. As long as that has some green days, then people will put money into the markets, right? And that's what they want. So they don't want people pulling the money out the markets, right? The one key thing is that the banks have to be liquid to keep this thing going. And the feds, they're pumping out massive money right now. I think they have with this bailout right now, they got $1.3 trillion package, right? $150 billion to severely distressed companies and sectors, $50 billion to loans. For airlines, $500 billion directly to the people, right? So you're trying to stop these companies who got their handouts from Trump already with the tax cuts, right? So that's what the tax cuts were, right? So Wall Street already knew that they had Trump there as that man because he gave them those taxes. What did they do with that tax cut money? They bought shares back, right? So they bought their company stocks back. Who does that enrich? The shareholders. So if you didn't own the stocks, again, you didn't participate in the wealth transfer. And I've, just been trying to educate people on this, like, okay, this is how you can get a piece of the pie. It's up to you. I can't make your decision. But all the tax cuts and all that other stuff provided, more money and wealth to the top because they are shareholders. They taking the risk by giving these companies their money so they can make more money, right? So they benefited from that. But people did not. Wages are stagnant. And this is another reason why they had to silence your man Bernie, because he was going to hit on those points. And Biden, he don't have no fight against Trump on this. Like, he's going to try, he's going to get some woman that's going to try to help him out. And the woman's going to be the best bet for him, to be honest. Whoever he gets to run with him, that'd be his best bet. But I think that, if he can get a good woman to run with him and they can address these things, it can be an evenly match. I just want it to be a good match. I really don't want it to be a blowout. That's why I wanted Bernie to win for the Democrat side, because I wanted it to be a good match where they could bring these views and people could actually see these views side by side. And meanwhile, Trump is doing the same thing that Bernie was going to do. I mean, if people talking about they're supposed to be, I mean, they're talking about paying people livable wages right now, from the outcome of this thing when everything stops. I mean, that's the same thing that Bernie was talking about, right? Anyhow, and that's coming from me, a Republican, right? I'm a Republican, right? When I participate, that's the side I choose. But it is what it is, right? I try to see things objectively as an analyst. I have to. And so I'm just calling out like it is, right? Whether you agree with me or not, that's fine. I'm open for debate any day of the week. So anyhow, I just want you guys to see this and understand that this is going to take some time to get through. At least 6 months, could be longer. The best case scenario is that they can contain the virus. And if they can contain the virus, I'm going to tell you right now, Trump is going to win, guaranteed, hands down, landslide victory, because he's going to be able to say that, hey, I unified the country to combat the greatest threat known to mankind ever, right? Because, Trump, he's a salesman, right? I like when Trump telling, but sometimes you got to know when Trump is selling. He's going to tell you, I pulled together all these, these private companies and we defeated this Rona. Right. And we're going to get the economy back on if y'all elect me for 4 more years. Right. Because, we ain't going to come out of this no time soon. So that's going to be the bull case plot. Worst case plot. This thing does not see the light of the day. We spiral into a depression. Biden will have a better chance of winning, this presidential election if that turns out to be the case. Those are the 2 outcomes, Yeah, so I like debating. Yeah. But that's basically what it is. So, and usually what you have right now, because I know a lot of people ask, what should I buy? What should I buy? Right. Normally in a downturn, you have gold that that's a protection against inflation. And when the markets go down, gold normally goes up because gold is a safe haven, a real safe haven. Bonds is a safe haven also, but the yields there, again, we just showed you guys the yields. The yield curve is the bonds, and you see those are depleted basically. So it's not attractive for investors to really even hold those because you're making 0%. You're not making no money on bonds. So the key, the challenge to investors right now is to try to find out where can they find yield. We call yield. Where can we get our rewards? And so what they normally do is put on risk. They try to buy stocks or the stock market going down. This is why we're in a very, very volatile situation. Gold is at a good price right now. Because it's actually going down, and silver is at an even better price because it's going down, because a lot of these companies are strapped for cash. They don't have cash. Everything is, is blowing up. So they're actually getting rid of their gold and their silver. And so that's why we're seeing gold and silver go down right now to more attractive prices. Just pull up the gold chart here real quick. All right. Yeah. As you guys see, gold has been performing very well. Gold still has much upside to go to as we go through this downturn. But right now you saw a sell off. Let me go to a daily chart just so you guys can see this. And I just had to give you guys cut through the midweek because, again, it's a lot of noise out there and people telling you this, that, and the third. You shouldn't listen to everybody on the web, of course, and you don't have to listen to me. I think you should listen to me, and you can actually go and check the things that I'm telling you to check my validity here and my credentials, whatever you want to do. So this is where gold has fallen to. So as this market's been going down, gold has came down too, but not as bad as the markets. And it's hovering right here under this 200 moving average. It's definitely oversold. And so, but the reason why it's been oversold is because, the guys that's been holding this stuff they're strapped for cash and they need to, liquidate it so they can get some cash, right? Because they need cash to fund these debts that they have, right? You remember I told you when you take credit, when you take debt, right, you're robbing your future self of spending, right? Because you have to service that debt in the future, but you got the house today, you got the car today, right? But you got to service that thing in the future. And say you lose your job was, poop hits the fan. What are you going to do? You got to sell your assets. If you got gold in your tomb and your vault, you got to go sell it, right? So you can get some cash so you can pay off those debts. And so that's what we're seeing right now. So the part of this bailout, that's what Trump and them were trying to do to bail out these airline companies. So these airline companies, I mean, they made lots of money. If you've ever flown anywhere, you know how expensive those tickets have been. They've been making lots of money, lots of cash flow, but they did not have that cash on hand to combat the situation that we're going through right now. What do? They bought their stocks back to continue to spread the wealth gap, right? And so here we are again, where Trump and they're going to do the socialist thing and bail these companies out instead of letting them fail. I know people don't want to, go through the rough times of letting them fail, But you gotta let it run its natural course, because when you bail them out, you create bubbles in the future, like all the bubbles that we have now. I mean, we had one freaking bubble last time. Look, all these bubbles is getting ready to implode right, and that's popping right now, right? So you fix the housing market, but again, everything else is going to crater, and then it hits the financial sector. So that's why they're also pumping in liquidity to the banks, because the banks, they ran out of money back in September. The Fed's been shooting them up with liquidity ever since September. We've been covering this ever since then. That's why I've been telling y'all this is not good. I've been telling y'all since September, this recession is coming. It doesn't matter what the bubble was or what the pin was going to be. The recession was coming regardless. But now they got, something they could blame it on, which is the Rona, right? And I just gave you guys the best case scenario and the worst case scenario, right? And so what you do is you take this information I give you, and you make, what you have to make with that. So that's right. Yeah, I wouldn't sell my gold either. If I was you, got silver, gold. It's not the time to be selling, right? And so right now we've been getting a lot of head fakes in the market. It's very volatile right now. We have our VIX indicator I've been showing you guys when volatility is really high. It is not the time for you to be getting in on equities as far as buying stocks right now. And so I know people are trying to tell you, to buy these companies, these airline companies, because they cheap this, that, and the third. But no, these companies are going to have to fail. They have too much debt. They're over leveraged. They can't service their debts. They're banking on the government to bail them out, which they're getting ready to do. But we got to see, how this all plays out, because, again, the layoffs haven't even hit yet, right? We have the lowest unemployment rates in history. And now they're supposed to projections that they're going to spike from 3% to 20%. Now, I definitely hope we don't hit 20%. And if we do, I mean, that's just going to be mayhem. I mean, really, people are going to be in like freaking breadbasket lines. But that's what we have economists forecasting employment rates to go that high. I was also looking into some of the bailout that they're actually telling the companies they got to do pay sick leave. You guys seen that? Listen, nothing is free, man. I know people and consumers think that things are free. Like, people think that this bailout is free, and it's not. We have to pay for this, right? Government doesn't make money. Remember, I started this off with they don't make any money. So who's going to pay for this, right? You are, right? And so, just keep that in mind, is that they're going to keep on trying to kick the can down the road, but they're going to rob you of your savings, because they're going to, we're also looking at a currency crushing right now. So it's going to crush the dollar, right? And the currency is eventually going to go worthless. This is my other point, that I believe that we are going to go digital currency. However, my crypto, guys, they may debate with me on it. I don't believe that, the cryptos that's available now will be the winning cryptos. I believe that the federal government already is working on a digital dollar, right? Because government has the power to make you spend the money, and they have the power to outlaw or ban the money. So I don't think that the powers that have powers are going to let, Bitcoin overthrow them. That doesn't fit this story. If this is a movie, this is not how the movie plays out, right? So that's what I ultimately believe. Not to get into any conspiracy or anything like that, but just to share my thoughts, because I jumped on impromptu for you guys, and I'm glad you guys are here to join me, right? So with that being said, Fedcoin, Sam says Fedcoin dollar, whatever they want to call it, right? China already has one. As you guys know, China, they've been buying gold, massive amounts of gold. They got their own digital currency. They banned Bitcoin a couple years back, and they got their own currency, their digital currency right now that's being backed by gold, which is interesting. So just keep in mind that when this all comes crashing down, we're at the beginning stages, and as it starts to continue to unfold, that we have to rebuild at some point in time. And so the rebuild phase is going to be interesting, because you guys are going to see things like you've never seen before. You're currently seeing some of it now, right? Some of you guys are actually working from home now. Never worked from home in your life, but now you're working from home. Well, that's made possible because of technology, right? So technology is going to be really at the forefront as they rebuild this economy, and they start to talk about all the vulnerabilities that they found, right? And that's another thing is, right, a couple of months ago, the Feds did a stress test. You guys remember the Fed? Well, you guys probably don't know, but Wall Street Jackboyz, y'all know we talk about the Feds did a stress test a couple of months back, and they said the economy was sound to go through any kind of financial situation. Right now, we don't see that to be true. They said this months ago, and they always say this, right? So if you guys have a chance, go watch the movie The Big Short. This is probably my 5th time watching. I love it. It's a good movie. Watch the movie The Big Short. If you kind of want to get an understanding of what's going on in these crises, it's a really good movie. You haven't seen The Big Short, and again, I don't get paid no endorsements, but just for the simple-minded person who's not a financial guru or analyst, that you can understand some of this stuff, go watch The Big Short. That movie kind of explains a lot, what's going on behind the scenes. So definitely do that. But keep in mind, as they rebuild, a lot of things are going to be different. Artificial intelligence is going to roll out like never before, right? What Topaz says, the auto industry closing, hell, they might come back to a damn AI doing their job. That's right. With the weakness that they have in here right now, artificial intelligence, I mean, they already have the AI to perform these tasks. We already got self-driving cars, right? The issue has been bureaucracy, right? When you have all these regulations that prevent them from being able to get it out. But right now we have Democrats and Republicans that's got this attitude that do anything to get this thing right. And that means cutting regulations. So a lot of those regulations be cut, and they're going to roll this AI stuff out, this computer stuff out. And a lot of those jobs are no longer going to come back. So those people that's going to be losing these jobs, when these companies discover these weaknesses, they got to rebuild. And AI, and I'm someone who's actually who writes artificial intelligence. I've written some coding for Google TensorFlow. I know Python. You know, I have a data science certification and things like that. Python certification, Tableau. So you guys saw my yield curve chart. So I've been doing a lot of stuff, and it's the scariest thing I've ever seen because humans cannot compete with AI, point blank, period. Not on your best day. We talk about eye surgery, eye surgeons. In my data science class was looking at the best eye doctors in the world have maybe like 45% success rate. And the AI has, at the time, and this was some years back when they did it, I think the AI has about 89% success rate. You as a consumer, who you want working on your eye? The one situation that's got 45% success rate or the 90% success rate? Logically, you're going to pick the 90% success rate because if this guy messes up your eye, you ain't going to be able to ever see again. So I'm going to choose the higher probability. So that's the whole situation, is that we already know what they're doing, but consumers, us, we're also going to demand it, right? Because we're going to want safer things. That's why they got to roll out, you know, driverless cars. They got to get humans off the road because humans are responsible for, I think they say like 87% of the accidents, not just accidents, but fatalities. People dying. And although self-driving cars are not perfect yet, I believe they have maybe 20%, failure rate or something like that. So it makes sense to go with the AI, right? They can sell that easily to the public, the benefits of these things, but those jobs are not going to come back. And if you're someone who has not developed your skills in the marketplace, you are not going to have a job. So people ask me, what should I invest in? Bitcoin, stocks, and gold, and all these things. The best advice that I can give you right now is to invest in your skills, because you're going to need them. And it's an investment in yourself. So skills, I don't care what it is, you just need to invest in some kind of skill set. Because as this thing, do what it's going to do, a lot of people are going to lose those jobs. You're going to be in the job market, and they're going to want people that can help these companies grow, and they have to learn to be more efficient. And they have to cut expenses. Right now, they're cutting massive expenses right now. They have to. That's just the nature of corporate culture, right? So people are losing their jobs. And when they rebuild, they're not going to come with the weakness. They're going to put the machines in, because the machines are much better. They're more efficient, and they're cheaper, and they don't catch the Rona. Okay, so with that being said, man, I'll just take a couple questions for you guys, and we'll bring the session to a close. But again, if you guys haven't been to our website, check it out, wallstreetjackboyz.com, so that you can, connect with other like-minded individuals, people that's out there. And again, here's the website here, Wallstreet Jackboyz. We have the courses and all that, just to show you guys. There's a social platform, so it's just like, Facebook. It's how I control this, and these social media platforms, they like banning people from time to time and craziness. But here, I'm the Zuck on here, and so I'm not banning anybody. All we talk on here is the economy, stocks, finances, anything dealing with money. If you want to know it, this is the place to do it at. This is the courses here. We just revamped this whole site, and we're still making improvements to provide you guys with world-class education. And as you guys see, this is my master class. If you want to learn how to trade, if you want to learn how to make money in the markets, whether the markets are up or down, then this is the class for you. So you just join the class. As you guys can see, this is what it looks like when you get in here. And, got some pretty cool little gadgetry going on. We got the little dark mode, right? And so you can catch the nighttime vision and all that other stuff, right? So pretty cool, right? And then you can also, when you log in, for those people that don't sign up for the courses, which you actually don't have to have the course to sign up. You can just sign up. You have your own messaging platform, and you can connect with other people. Just have your profile and everything like that out there. You can drop your pictures in there, put a little profile in there. And this is my little profile picture here. But this is my site. This is what I built, and I'm continuing to develop, right? And so this is what it looks like. All right. Again, join the site. It's free. Connect with other people. You see everybody got their pictures and stuff like that loaded up. And if you don't, make sure you actually get those loaded up and connect with people, right? You have your inbox. Jump into the inbox. Drop some messages. You guys can communicate with me directly. We have forums, all these things here. So definitely join us, WallstreetJackboyz.com. Also, I go live every Sunday for Game Plan Sundays. And check those videos out. They're long. There are long form content. It's about 30 minutes to an hour long. So it's lots of information, but we're live. And if you have anything that you want to take a look at in the market, we'll assess that. I'll provide my commentary on there. But again, I'm not your financial advisor. I'm just providing you guys ideas that I would do. Right. So that's what that's all about. So with that being said, you guys got any questions here? Just know going into this thing, take care of family, right? Take care of family. That's what's important, right? Right now, that's what's important. Take care of family, spend time with your family, take care of your people. You got to feed your people. Kids are home now, right? So kids are home. School is home now, right? So they're sending kids home with school. They got laptops. Internet companies are providing this free internet services. So a lot of things are changing, right? You start seeing classes coming from home. People that always wanted to homeschool, now they got homeschool for real, right? So things are different. Yeah. So yeah, we'll go through the site more live so they can actually go through how you think that'll change insurance though. Yeah, everything is changing. Auto insurance industry's closings. Yeah, the oil industry, everything is going to get bailed out. And once they're being so generous, everybody's going to have their hands out. And so they're going to have to do more. They're going to have to do more bailouts. And that's just, again, this is not good. This is not good. And this is not a laughing matter. It's a serious matter, right? Because think about it this way. I told you guys, people got money to buy the goods that they want, but they're not available. So as soon as people got to start wiping their ass with leaves from the trees, what do you think the outcome of that is going to be? They're not going to be happy. All right. Once people can't get the food that they need for their babies, they're not going to be happy. Right. For their kids. And this thing can really spiral out of control. I was just at a store yesterday, and I was telling my man Tashawn how they had banned me from going into the store because I had my Wallstreet Jackboyz hoodie on. Right. And so they have I didn't even notice a sign that they're saying no hoodies and no backpacks. They're already trying to mitigate and prepare for people to damn riot, right? Because if you don't have food, you don't have the things that you need, you don't have your tissues and things like that to wipe your ass with, right? People are going to be upset and riots could happen. And so Congress and them, they're trying to do everything they can, really, really fast. They're working right now as we speak. They haven't shut down. They just passed phase 2. That's why the markets are up slightly right now. NASDAQ up 94 points, S&P up 30 points. And we have to see if this is going to hold tomorrow. We'll see. But yeah, so that's my spiel on everything here. With that being said, I'll let you guys get back to the rest of your evening. I'm going to spend some time with my kiddos, and you guys have a good night. We'll catch you on Sunday at 7 p.m. Peace.